Hey day traders, this is Al Hill from TradingSim.com. I'm going to talk to you today about how to properly draw trend lines. So historically, I think a lot of traders and technicians like to draw the trend lines across every point and have everything line up perfectly. We basically love to look at an old trading technique, which is the Richard Wyckoff method. And Wyckoff called for just basically calling for the formation or the creation of uh, parallel trend lines um, that encompass the price action and not necessarily looking to hit every single point on the chart. We're going to show an example of that today. So if you go over and select the trend line tool, so you don't really focus too much on points. You focus more so on making sure the lines are parallel to each other. So you want to take two origination points and you want to make sure that they're parallel to each other. Now as you see here, we try to start drawing these lines and these wicks, right? It creates a lot of confusion. So again, the Wyckoff method, which is you want to avoid drawing these cones and triangles and all these random patterns. You look at the market in terms of just very basic, clear levels. So if you were to draw a parallel line here, I would say it's somewhere around there, right? So as you can see now, you just have a clear channel. And that's what Richard Wyckoff believed in, that the market moved in channels. He really didn't look at the market in terms of, you know, these various, diamond formations and a lot of the stuff that technicians get lost in. So as you look here, the key thing to note is that as you're in the channel, right, you can kind of see that the stock slowly started to just reduce the amount of volatility in the channel. So here you have a lot of swings. You have some decent percentage moves in the swings. But once you get down in here, it kind of goes flat. You also look and you can see that the stock made a lower low, but the stock could not get as close to the demand line, right? The line where buyers step in. The stock could not get as low in terms of the demand line. So, you know, these are all indications that there is more buying coming into the market. And another thing I want to point out here is that you can kind of see that the volume, right, as it started to come out of this, started to pick up a little. You can kind of see a little bit of a slope here. Not too much, but you can see a little bit of a slope. So that shows you here that, okay, we can bust it down, right, to the demand line. So there's enough buyers stepping in. And then you can kind of see that the volume's picking up here later in the day. So these are all indications that this stock is poised for a real breakout. And we're looking at VeriSign, ticker VRSN, from June the 9th, 2010. So again, parallel trend lines. You want to see the volatility die out as the stock goes through the channel. You want to see volume pick up as the stock comes near the end of the channel, which is, again, this implies that the stock's going to break out, right? And the last thing is you want to see that the sellers are unable to bust it down to the demand line or where buyers will come in. Alright, so what you want to do here is you can either buy the breakout or you can buy the pullback. So due to the signs of strength here, the volume that's coming into play, we're going to buy this on the breakout. So let's buy 3,000 shares at market. Alright, so our execution price is $27.83 when you factor in commissions. Overall estimated price is $27.84. So again, Trading Sim, we factor in commissions until the actual execution price. That way you can see your true cost. But if you're a trader that just wants to see what price the execution took place, you could come here and see it's $27.83. Alright, so let's fast forward a bit. So as you can see here, the stock just had enormous demand, right? So this is your supply line. I'm sorry, your demand line where people buy. This is your supply line where people sell. So there's enormous demand because the buyers were able to push the stock above the supply line, or where sellers come into play on a gap. Also, another key thing to look at is right before this breakout. Notice how there was a minor little low here, but the low was higher than the previous low, and that preceded the breakout, right? And look at the strength of these candles, right? So these are all signs of momentum in the stock. So here, you're day trading. You don't want to get too greedy coming into the lunch time zone. So just simply sell out at market. Made approximately $1,650 in this simulated trade. All right. All right, folks. Well, there you have it. This is the Richard Wyckoff method for drawing trend lines in the market. All right. Good luck trading.